Good afternoon, everyone. Welcome to this TradeStation webinar. Thank you for taking the time and joining us to learn a little bit about TradeStation's trading platforms and some of the strategies that our guest speaker, Brandon Wendell, is going to talk to you in a moment. Before we pass the microphone over to him, let's go through some of the introductions and some of the disclosures. As I said earlier, Brandon is our guest speaker today. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. And today we are doing futures options replay. So these are key insights and strategies on futures options. For those that are joining us new for the first time, futures options is a product that you can trade on FuturesPlus. Is a dedicated platform that TradeStation provides to those traders that want to trade options and futures. Today, we're going to highlight some examples, practical examples that any of you can do on your everyday trading. And we're going to talk about the reasons why some trades have worked and why some other trades have not. We always look at the two sides of every single trade to make sure that we have a balanced view and we're not over promising something that and be a little bit more realistic about market expectations. Let's go and go through some of the disclosures, and that'll give you a little bit more information about what we're doing today. Keep in mind that every symbol and idea that we talk about is for educational purposes only. These are not recommendations of TradeStation. Also, active trading is not suitable for everyone, especially when it comes to trading options, which carry a high degree of risk. All the links associated with the trading options on futures are available on this slide, and at request, just let me know if you need a link to any of these disclosures and I'll send them over. And one more thing that I wanted to point out is that even though it's a pleasure to have Brandon here with us, he's not affiliated with TradeStation, so his ideas and methodologies are his own. So thank you guys for being here. Brandon brings a ton of experience, not only educating traders, but also trading himself. So it's always a pleasure to have him here in our platform to talk about trading strategies. And before I pass the microphone over to him, let me just show you what we've done recently in terms of education regarding options on futures and futures. Let me bring my browser here into the screen. And if you go to TradeStation.com, this is something brand new. If you hover over Learn, you'll see an option for futures education. The Futures Education Center was created to contain all the education we do around futures. You'll see the events right up here. This one where my cursor is the one we're doing today, Futures Options Replay. But on May 20th, we're going to have lesson 3 of our FuturesPlus Masterclass. If you haven't registered, you can register from here as well. We have a Futures Trading Essentials Guide. And if you scroll towards the middle of the page, this is where you'll find classes like this one we're doing today. This is called the Futures Options Replay, where we talk about practical futures options examples and the reasons behind those trades. If you want to join for the upcoming webinars, you have a button there. If you want to watch any of our prior presentations, just click on Watch Previous and it'll load those archives for you, okay? Let me go ahead and stop my share and pass the microphone over to Brandon. Brandon, it's great to have you here today.
I'm great. Thank you very much. Should be able to see my TradeStation Futures Plus screen now. Looks pretty good there. There we go. Perfect. And let me make sure I can see the chats as well to answer any questions that might come up. Just out of curiosity, how many of you are actually actively trading options on futures? Give me a 1 for yes or 2 for no. Basically, if you're no, obviously you're probably here to gain a bit of information about it. We actually did some education on that, as I mentioned before, actually, as Jesus mentioned just a little while ago in the Learning Center. If you knew Futures Learning Center, is a bunch of great information on it. Okay, so a lot of newbies. Perfect. Hey, that's fine. Nothing wrong with that. Gain some knowledge to add to your repertoire, because it's, if you're actively trading futures, then adding the futures options shouldn't be too much more difficult to do that. If you've been trading options and you want to have a little bit more depth, obviously options on futures can add that as well, because you're trading literally just options on futures versus options on stocks. So as Jesus mentioned, there's a whole series of masterclass that we did recently, and we're still in the process of doing on options on futures, which will be more of the basics and how they work. Here, we're kind of going over, I've got some open positions, and we'll go through what's been going on with those positions and how we manage those positions, or forget to manage them because I think I forgot to put on some stops. We'll deal with that as well. Basically, go ahead and bring up a couple files here. I took snapshots as I got into this position because last week I realized that I was looking at the markets and specifically the NASDAQ. So I'm going to focus on the equity indexes right now. But again, there's options on a lot of different futures contracts. You just got to be careful of the liquidity. You want to make sure that they're liquid, that there's enough trading going on. You can see if I go back to my option chain right here, this is the option chain for the NASDAQ futures. Perfect. Now I can zoom in on things. I want to be able to do that so you can see. Anyway, this is the options chain, and this is the new options chain. There's actually two. There's an old one and a new one, or original and new. I like the new one because if you do the original options chain under widgets, you'll actually find them. Again, if I zoom back out, right here under widgets, you can see market views, or under options, you have options chain and options chain new. Options chain will only show one option series. Meanwhile, with options chain new, I can look at multiple series. I actually not going to trade the expired ones, but we do have June. Here, I'll condense. I have June and September, and I can even go out further if I want to. Say, for instance, we want to look at, I think this is corn. I already have a tab open for corn. That's not populated right now, but I can reopen new tabs. Let's say we want to go ahead and look at crude oil options. I just go ahead and start by clicking on the plus sign. The exchange was CME. I look for CL. And you have to scroll through it a little bit, but not too bad. And right here, it helps to know the symbols because if I'm looking for CL, it's not going to be there. So I go to LO, which is actually crude oil options. Now, if you're not sure of the symbols, you can actually go to the CME website and look them up as well. As a matter of fact, if you go out to CME Group, under the search feature, the easiest way to find this, just use the little magnifying glass there and type in, there it is, contract directory. And it's actually contract directory and calendar tool. It'll show up right there. And there's even an article that was just underneath it about how understanding the tool, but going into this tool itself, as soon as it pops up right here, say for instance, energy, it happens it's default to energy anyway. You can see I've got nat gas and it shows LN. LO is WTI, West Texas Intermediate Crude Oil, or CL. That's the future symbol, CL. And like I said, if I'm looking for the option symbol, they're right there. If I want to do heating oil, it's OH, OB is gasoline. Currencies, we've got Euro, US dollar, you got Mexican peso, yen, and the symbols are all right there. In addition to that, I can go agriculture, click on agriculture, corn, OZC, OZW is wheat, and so on. I can go into the energy market and I go to LO because I see that's the CL symbol that I was looking for, crude oil, American crude oil. And now I can see the individual symbols. What you'll notice is that there are short-term symbols for each day of the week. It's kind of crazy. You got MNL or ML, NL, WL, XL, and LO. LO is the weekly for the futures and for crude oil specifically, and would be Monday, week 1. Let's zoom back in on this so we can see it better. You can see we've got 1, 2, 3, and then weeks 4 and 5, depending on how many weeks of the month there are, or the next month. And the symbol, actually, you'll see is K. That stands for the month. And then 5 is 2025. So that would be ML1K5, Monday for crude oil, first week of May 2025. That's the expiration of that contract. In addition, those are all hyperlinks. So this is actually today's option that expires today on Cinco de Mayo. So I click on that, and right here, you can actually see the symbol, exactly what it is. As I told you, it's Monday weekly option, week 1 for May, and it expires at 2:30 p.m. Eastern on 5/5. It's an American style option. We know that means it can be exercised at any time or an early assignment is possible. It is also deliverable. That's the options method. Remember, options and futures might be different. In this case, they're also going to be deliverable. Deliverable when you go to future, and by the way, this is the information on the option itself. If I want to know the underlying future, I just click on future. And you notice that it's the June contract. Even though we're trading May options, they're on the June futures contract because that other contract's not available right now. It's already expired. We've had first notice. So it'll also warn you first available trading date, the dates of expiration, the expiration date. If you're a TradeStation customer, you do not want delivery. As a matter of fact, you can't get deliverables because what'll happen if you pay attention, if you have your TradeStation open, you should be paying attention to, actually, go there. I go to view messages and the message center. I was going to go basically on my shortcut under the bottom window here. If you open up, you'll see the little TradeStation symbol. There it is. And that's the message center as well. So you can open it either way in the platform. Now this is TradeStation desktop versus the FuturesPlus. But right here, I can go to messages. If you're trading February crude oil, that was an old message, but it shows you got to offset or roll by a certain date. Otherwise, you will be restricted, meaning you cannot open new positions, only close existing positions for about 90 days. So they don't want you to mess around with that. If you get close to that first notice date or expiration date, you got to pay attention to these notices coming to you so you close out your positions. The deliverable on the future is the actual crude oil. The deliverable on the option is the futures contract. If you were long, you would gain a long position in the futures contract. If you were short, you would gain a short position on the futures contract or a sell position. That's important to know. Now, if the contracts, like for this one, let's say we do Fridays right there, LO2, because that one's the one I'm looking at, it's already expired. This one doesn't expire till Friday. When you look at the ones that expire further out, or right here, you'll notice that says LOM5. What the heck? It doesn't have a week. That's the monthly. So that's going to be the one with the bigger volume altogether. And you can see it says crude oil option. So it's LOM5. That's the June contract, which is actually what we're viewing on this. When I go to the contracts, again, right here, June, it says 11 days because it's still counting today. Those are the June contracts. You can see right here, it says 10 days because they've already updated. It's technically 11 if you count it today. But that's the monthly contract. If I were to go to next month, May, we go to June. Maybe. Come on. There it goes. Oh, I clicked it twice. Went to July. That's okay. But you see there's LOQ. That's the August. The previous one, LON. And notice they're not always on a Friday for the expiration for those monthlies. That's because the underlying securities contracts, the futures themselves, expire at different times. Typically, the futures expire between the 19th and the 22nd of the month. So, for instance, this is the July, which is traded in June, but it's the July crude oil futures contract that expires on June 16th. But the underlying futures contract doesn't expire then. It expires on 6/20, the end of the week. So the options, you have to exit those because they expire before the underlying contract does. If for some reason the underlying contract and the option expire at the same time, then they would be cash settled, not deliverable, because you can't deliver an expiring contract. That was my point about all that. Okay. But when you see deliverable on the option, it means you get delivered the underlying futures contract. So go back to today. There we go. And I'm not going to trade today's, but I can look at the monthly again, LOM, and we got 10 days till expiration, all the information there. I have a position, several positions open in the June 2025 futures contract for the NASDAQ. And this is showing me, does it say expired? June 25. I'm in simulated mode. If I go to live, it'll look different. Now what I'm going to do is minimize this and go to my positions tab. Actually, before I do that, I'll go back to the picture of what I was looking at when I was taking the position last week. At the time, the trend overall was kind of choppy. This is the actual chart that I took a picture of on Thursday. It says it at the very top because I dated it then. And you can see right here, the 30th. So what was happening is that prices had dropped from an area of supply right here although it may not have been fresh, and that's a part of a problem that happened here. Overall, prices had dropped from that area, and I believe this is a 60-minute time frame. I was expecting prices to roll over and possibly continue down towards this area of demand. And obviously, it didn't. We'll see in a moment here. If your option expires out of the money, do you still get the futures contract delivered? No, it's only in the money options. So out of the money option, it would just be expired. It's just as normal options work. If you had an out of the money option, you would just lose the premium. It's the same thing. In this case, we go to NASDAQ. There we go. And let's see. I'm not sure if I can enlarge the font on this or not. I'll try. Settings. I don't believe I can, but that's okay because I still have the zoom feature. So going here, I'm going to enlarge this first and widen this and zoom in. So here we are in the position I actually did 2 positions. I know there's 4 contracts. I have a bear put spread right there where I bought the 19.5 and sold the 18.8. And then I did a bear call spread, selling the 19.6 and buying the 19.7. It's actually 19,700, 19,600. I'm abbreviating a little bit there. Okay, but that's basically what it is. So there's 2 positions. It was a bear put spread and a bear call spread, anticipating the prices were going to move to the downside. And let's see if I bring up my calculator, there. Unfortunately, I'm not sure if I could actually group these. There should be a way to do that. The problem is I'm in simulated mode, and you have to deal with what you've got available to you in the simulated mode. In the live mode, you can create positions using this tool right here, strategy creation tool, which is really cool. I just can't do it in the simulated mode. What you have to do is go leg in altogether. For instance, if I was planning on doing that same type of position here in the NASDAQ, I could either do it by creating it on the option chain. Basically right here, you can see there are custom strategies where you can build, or there's some that are already built in there. Or I go to this tool right here. Again, CME. I'll type in NQ contract. Oh, there we go. We just had to create it. There we are. NASDAQ, June 2025. And let's see, if I wanted to build that position I had for the puts, it was 19,500 that I was long. So I just click on it. June 2025, strike 19,500. And then add June 19,700. There we go. And that's supposed to be a short because it's a bear put spread where I'm going long on the upper strike and short on the lower strike. I did that backwards, didn't I? Oh, it's 18.8. I was looking at the wrong one, of course. There we go. That makes more sense. 19.5 and 18.8. That's why it's easier when you use this correctly. 18.8, not 18.5. And there's an even easier way to do this. I'll show you. There we are. So that is my bear put spread. I could also just simply go to templates. And notice under templates, if I delete these 2 out real quick, I'll just go to templates here. And I could search, or I could just simply look. There are 3 pages of templates. And we are doing a vertical spread right there. So I click on that. And it already populated one based on the last option I had chosen, which was the 18,800. But that is actually supposed to be a short. So I just change it from P to S, or B to S. Then for the long, again, I just hit this option, NQ, June 25. And then I just have to select the strike. Let's see, vertical spread. There we are. And the one I went long is actually, again, the 19.7. There we go. And then I was trying to load. Maybe that's what I did is I threw it off by jumping in too quickly, but that's okay. like I said, what you can do is just put it in a watch list, even though you can't trade it. So I unfortunately had to leg in individually to be able to create this position. And why is it not letting me do price? That's really odd. But right here, I can just go to watch and it'll populate. You'll see there's a watch list right there that'll populate. And I think it didn't do the whole thing because I didn't fill it all out. So anyway, that's how you can build the spreads by either doing it that way, or I kind of like a click and go right here. If I want to build that same spread, let's say I want to do the bear call spread. We have the 19.7 and the 19.6. Well, that's out of the money or in the money right now. So let's say we're going to do an out of the money spread on a bear call. I would simply click on one. I'll click on this. And that is the short. So I click on the ask price for the short. It says -1. And then I can click on the other side. Let's say we got 21,000 and 22,000. There's the long. And I can either open it in an order ticket or however I want. But right there, I can load that particular spread in an order ticket and send it. I can get a little more creative with this. And right here, you can see we can do OCO or bracket orders with stop losses and profit targets based on the movement of that underlying premium, which is pretty cool. Can I use NASDAQ options to offset your NASDAQ futures margin? I don't know about that. Again, that's depending on how the brokerage handles it. In theory, yes, if you have a long position in the NASDAQ and you're worried about the markets pulling against you, obviously you could do a hedge. And what you would do in a hedge, actually, I would not necessarily just buy a put. If, for instance, you own a position on the NASDAQ right now at whatever strike we happen to be or whatever price we're at, right around 20,000, right? So 20,059 roughly. Now, let's say you're willing to take a small drawdown. Again, I got my calculator here. We're at 20,000. Obviously, if we take say a 5% drawdown, right? That'd be what? 1,000 points? Because 2,000 would be 10%. So if we're willing to take a drawdown of 1,000 points, basically we would buy the 19,000 put, right? And we would start being protected only at 19,000. The problem with doing that is it costs money, $341 on the premium there. Now, remember, this is not $341. No. Okay. What you see on these numbers in the premium has to be multiplied by the point value of the futures contract, the underlying future. So this is 341.75 times 20. Just like when you look at the premium of an options chain on a stock, you have to multiply it by 100 shares. Here, you just multiply by the futures contract. So you want to buy a put, it's $6,835. That protects you beyond a 5% drawdown in the price of the NASDAQ. But if we're okay with it, and we know that if it goes up to a certain level, or we think it's not going to be able to get to a certain level before a certain amount of time, why not create a collar? Because what'll happen with the collar is not only do you buy a put, but you sell a call against your position to offset the cost of that put. So if we were to take a look again at the chart, and let's see, we'll do this with the chart, font size, that I get enlarged. So let's say on our daily chart, we're not expecting to get above this level about 20,700. Well, instead of simply paying that $6,000, we get into that put also, and you have to cross collateralize with your underlying security, the NASDAQ futures. Otherwise, you'd be naked on the put. So we could also sell a call to offset our put. And what I say was 20,700. So in that case, what are we looking at here? 20,000. Oh, you get the 500. We can do 23,000, and we'd be able to buy that for about 1125. Sorry, sell, not buy. Yeah, sell. So it offsets a little bit of the cost. I forget what we were dealing with before. We had 6,800. Yeah, 341.75. 341.75 minus what we collect is 1125. If you're willing to, you could go a little deeper at the 22.5. The risk is if prices do get up there, you have to get your futures contract called away, but it would be called away at a profit, obviously. So in this case, 330 again times 20, lowered the cost a bit. Not a huge amount. Again, it was only what, 1125 is the offset. So you basically only save $225. But depending on where you end up selling, 22.25, you can save $500 on that $6,000, $6,500 position. So you knock it down just a little bit, save a little bit of money, almost about 9% if you want to, for the cost of your insurance. But yes, you could, in fact, use a long position on a put, and if your choice, either creating a vertical spread, which is the other alternative, or a collar, which is simply selling a call, but you have to have that cross collateralization, basically that margin of the long position in the underlying NASDAQ. I don't know how the TradeStation handles that. You'd have to talk to the trade desk to make sure. But that's a great question. Because yes, if you have a loss in that NASDAQ position, eventually you may get a margin call if your equity drops below a certain amount, right? Because you have a carry cost and a margin requirement or maintenance requirement for that underlying position. Anyway, as I was saying, I was originally looking at this with an opportunity potentially for a bearish position. Unfortunately, it didn't quite work out the way I expected it to. Again, going back to my picture here, I was expecting us to drop from that 19.5. And as you can see, we are way above that right now. And yeah, I held on too long. Let's put it that way. Again, going back, this is the wrong time frame for this chart. Let me fix it so I can see the actual zones. It was on the 30th, again, 60-minute. And if I'm not mistaken, I believe I can change the time frames by typing them in as well. Yeah, see, I just type in 240, so you can get different time frames if you choose to, even though the defaults that show up are a little bit different. So again, I'll just go back and click. It just takes a moment to populate, but it actually does happen. So again, I was on the 60-minute time frame. There we are. And the 30th, as I said, I was expecting this to drop. I think this is what we were looking at right there. Unfortunately, as I said, I kind of misinterpreted this. This was actually the origin of the selling pressure. This was the first retest and trade opportunity. So it looks as though, obviously, it's gone a bit higher. There's still time left. Honestly, this is what we call a novice candle today, or at least on the 60-minute time frame. And with a novice candle, typically what happens is it didn't retrace at the end of the day. It's not the novice candle because it didn't close above, as realized. The novice candle is where you get a large candle in range with high volume. It usually gets retraced pretty quickly, but we didn't close above the high, so it didn't complete all the characteristics I was looking for. This one did. And let me zoom in a little more so you can see what I'm talking about. Right here, you see we broke out above prior highs and we closed above those highs with a large range candle. Those are novices typically buying the breakout above the highs. As a matter of fact, if I were to break this down a little bit more, just to prove it, that's where it broke the previous highs. If you were to break this down, this was May 1st, 10 a.m. If you break that down into smaller candles, most of the volume and the size even would probably happen on the breakout itself. Break it all the way down to, say, 5-minute chart real quick. And yes, I can show you how to do different kinds of option positions. Absolutely. It's what I'm here for. And where's that breakout? Right there. And look at this. Is that right? No, that's Monday, May 5th. It was the 1st. Go back. Did it there too, though. There we are. Friday the 2nd. Where's the breakout? There it is. Notice what's happening there. Prices are already moving up. There you get that elongated candle as we're breaking out of the highs. And what happens? It gets retraced. And again, notice the big candle is right here where the other big candle was. You know why? That's where all the stop losses are being run before prices turn around and go back in the right direction. It happens quite often. Anyway, I don't want to spend too much time on that. I want to spend more time on the options right now. We'll maybe look at some technicals another day. Basically, if you're trying to find an individual positions on securities, I started looking at crude oil, so I'll switch over to that right now. CL, there we go. And we'll go to the June contract, which is our current contract for crude oil. And let's go to a bigger time frame. Now I can go to daily. So right now we're trading in a little bit of a range we've been in for pretty much the month of April. We're near the bottom of that range right now. We kind of went up slowly, back down. We'll have to see if we're going to continue to break down or not. I'm not doing enough analysis to figure that out right now because that's not my purpose. I'm just going to show the mechanics of opening those positions on this platform. So if we expected us to stay relatively stable here, then we could use either a butterfly or a condor position. Well, I prefer irons for the most part. You could do a butterfly or a condor, which is using all calls or all puts. The problem is sometimes that leaves you with a little bit of a directional bias. I prefer to use the iron condor. See, did I do right? Yeah, I did. Good. And the reason why is with the irons, you have a little less of the bias because you're using both calls and the puts. So to me, I just always preferred to use the condors, iron condors and iron butterflies if I expect prices to stay pretty stable. It's a personal preference though. Honestly, you can get the delta neutrality pretty well with either one. So again, going into this, first thing I'm doing is my analysis to see where that range is. And once again, I'm not saying this is a range I would actually trade. This is not. I would do much more research on this. Okay, I'm just showing you the mechanics of this. So we're looking at roughly, so write things down here real quick. We've got about 65 on the upside and 50, we'll call it 55 on the downside. We're currently trading around 57 bucks. So we're a little low in the range. You could have a choice with an iron condor, especially you could actually leg into this because we're closer to the bottom of the range. You could put on the bull put spread first. And the easiest way to do that, again, not in simulated mode, but in live mode would be to use the templates. So you would go to, I don't think I have it open anymore, do I? You go to widgets under the options, strategy creation. There it is. Like I said, in simulation, I can't do it, but in live, what I would do is just simply go and look up option. Oh, that's why I clicked future on the wrong one. That's why I couldn't find the strikes. Anyway, once again, make sure you use the right symbol. Crude oil, I go to LO. We've got the 65. We'll do the 55s first. Actually, I can choose any of these for now. But since the Junes are expiring pretty soon, I may want to go to July anyway. I'm just going to click on one to get it loaded. And this is why. Once you have something loaded in here, instead of scrolling through the whole list, it's much easier to click on the components you need to change. Since I'm already on crude oil, I just go to July and then I can select the strike, which I said I wanted 55. So there's the 55. And actually, I did something wrong here because, again, I wanted to do an iron condor. You see right there, it says condor, iron condor, or iron butterfly. Both about the same. So I'll use the template, again, for the iron condor. Now there's the short put. I have to change it from call to put by clicking on it. I have to put in the long side of it. So I go next on the magnifying glass there, CME, click on option, not future. That's where I made my mistake earlier. I click on this column and click L on my keyboard and scroll till I see LO. And remember, if you don't know the symbol, you can look it up in the contract directory and calendar tool. Again, I just click on any of these because I don't want to have to scroll through it all. So I clicked on June. I'm going to change that to July. 55. Let's say we're going to do a $5 spread. I'll do 50. Put. Now for the top, it's 65 strikes. So again, I go back, option, L, scroll down to LO, pick whatever, click, change it. July. This is the long. So I'm going to use the 70 because 65 is the one I want to sell. We're doing a $5 spread. And that is a call option. There we go. L or LO. Pick whichever. And this is the one I'm selling. So I'm going to do the 65. Go back one step. Month. Select 65. Call. And there it is. And now I can't create because it'll say you can't do it. It's simulated mode. So I can put it in my watch list. There it is in my watch list. Now, if I want to create it in a simulated mode to actually put it in, I have to just manually do individual legs. It's not the end of the world. So for us right now, I'll go ahead and do that. That way we can check it out the next time we get together. So I bring up my options chain. And again, I just did that by hitting the little plus sign and bringing up the options chain. If you weren't familiar with it, again, I just go to, it's hiding underneath this, annotate. There we go. CME, CL, LO. Boom. And it brings up that tab. I've already got this tab created. So I'm going to go to July's and I'll do 65 and 55. So we have the 55 puts I'm selling. Unfortunately, I just have to do one at a time, and I'm just going to do market orders. Not preferred. I could do a limit order, obviously, but I'm just going to do market order, and I'm selling that one. Let's see. This is the 25.50 July put. No, I just wanted the 55. I clicked the wrong one. That's why I verify. One, sell, boom, confirm sell. Should be in. I go to the 50s. Scrolling up, buy, one, market, buy. That's the bull put spread. Now I can do the calls, which is 65. So I go to the 65 calls, 65 call, market, sell, and then the 70 call. I go to the bid price, again, market, buy. So there it is. Now that's doing the legging in, which is going to give me the worst price, obviously, because I'm just doing market orders getting in. And now we can see on this position, did I get filled on all those? I'm missing one, aren't I? What am I missing here? I have call, put 50. I didn't miss the 55 put somehow. One. Market. I must have, I don't know if I changed it. I forgot to put in a market order, maybe. Do that, confirm sell. And there it is. Now I've got it. So I can check to make sure I don't have any pending orders as well. I'll check that later. I certainly might as well do it now. Go to widgets, order management, and my orders and fills. And I did put in a limit order by mistake right there. So I cancel that order. There we go. You see it's filled 0. So I stopped it and that should be good. Or actually cancel this order. There we go. That's what I want to do. That's it. So I did get filled on the other side. Good. So now I have a iron condor on crude oil. So in live trading, yes, all 4 legs should be going in at once if you do it as a strategy. I could do a custom strategy using this, or I could use the templates under the strategy builder, which is typically easier. And of course, with it, you can also create the stop losses and everything as well, if you choose to. Let's say I want to do the butterfly now. Again, we're trading right around, what did I say, about 57. So let's say we do that at the money. I'm going to go ahead and sell 2 at the money options. See, I click on them. I click on the ask, it automatically says -1 for 57s. And let's say we do the 55, I buy the put. And since we did $2, I'll go to 59 and buy the call. And there's my butterfly. I got the July 2025 butterfly, 57 centered. There it is. Submit. And it should build it automatically. There it is in the strategy creation. And again, unfortunately, I cannot do this as all at once. But if I was in live mode, that's how you would do it. Instead of just using the template, if you already know what kind of position you want, you can just build it. You hit custom, and it loads it as a strategy. And I can do this, create and watch. It'll put it in my watch list and send the orders. And when I send the orders, again, if I do create, I can't do it right now because again, it's not supported, but I could actually decide limit order, market order. I could put in the stops in the bracket as well, but that's how you would do it. And I find it easiest to trade right off this option chain. Like I said, if you want to do a straddle, same thing. Okay, that's a custom. Actually, fly would have been butterfly anyway if I did that right there, you see. But custom, once again, doing a straddle, okay. Click the buy, both at the money, 57s, boom. Right click, open an order ticket, or I can do strategy creation, either one. If I just hit submit, it'll open up the strategy creation for me and populate with the strikes and everything already good to go. So I could have done that with the Iron Condor as well. Unfortunately, the position I created earlier in the NASDAQ is now a losing position. I forgot to manage the trade and put in the stop losses, which I can't do on simulated mode, but in the live mode, I'd be able to do that. So unfortunately, these two are losing right now. I've got, actually, it's not too bad, is it? Let me see. The calls, the bear call spread, I have 23.90 profit minus 23.40. And that's actually up $50, believe it or not, because of time decay, even though it's in the money right now, I believe, because we're at 20,000. I sold the 19.6 and bought the 19.7. Is that right? Interesting. And then the puts, that is actually profitable too. Oh, maybe I did the bull put spread. Hold on. What did I do? I thought it was a bear. See, that's the problem. When you can't combine them, it makes it a little more confusing. You got to figure out the strategy that you did. But I could have sworn it was a bearish. I had the 19.5 on the long and 18.8. Yeah, on the short. Now, that's a bull put. Interesting, because that's profitable too by about $300. My whole position is profitable by $365 right now. So we'll take a look at the result of this in the future as well. And also, again, the crude oil, there it is, the LO position right here. That's the Iron Condor that was created, which is currently down $80, but that's basically the spread that I got in on. You can see that some of the options are flat. Most of them are down $20. Okay. But yes, in live trading, you can get all four of those done at the same time. Additionally, when you put in the order, if I create a custom here, or even the butterfly, like I said, if I did the butterfly at $57, you click the ask for the sells, and then the buys, did that wrong. You got to click the bids. So right here, again, if I want to do this, I go 57, 55. Oh, it's actually doing it. Where are we here? 59. And there it is. But this one's kind of weird. It did a 2-2-1 ratio. Should have been a 1-1-2 ratio. So if you put on multiple option strategies, certain futures contract, how do you market the bias? Oh, you can actually do that in the positions here. There are different columns that you can edit and add in, as you can see. You can look for, I don't know if there's a bias on this one, as a matter of fact. There should be. It is not there, but you should be able to monitor. That's something actually you have to ask Jesus on for the platform, but there should be a way of monitoring the delta for the actual position. Like I said, when it's live and you have the full position on together and linked as an open, oh, there we go, grouping. Nope. But there should be a way of grouping them to make it a position, like I said, and I'll look into that for next week because I'm a little light on that. I don't know. But you should be able to put this together as an Iron Condor, and it should give me the Greeks for that Iron Condor. So I will find out that question for you for the next time when we're together. If you need it sooner than that, then the best thing to do is to contact help at the trade desk for a TradeStation. Because again, I don't work for TradeStation. I'm just here to give you a little bit of guidance into some of this. But yeah, I will find out a little bit more for you as soon as I can. Anyway, I've got to get going. If you got any questions other than what I've already answered, please let me know. I'm going to turn it back over to Jesus in a moment. Do you know, is there a way in the simulated mode to group these together to show them as a position?
I was listening and I cannot think of a way, unless I haven't learned something about FuturesPlus, but it's something we can research. It's an interesting concept. So we're
Right.
trying to combine different positions into one just to see an overall risk.
Well, because it's an
measure.
iron condor, rather than just seeing the individual legs being
Mhm.
shown the way they are.
I think when you go in live, when you trade a spread, doesn't it show a synthetic symbol for
It
that
should.
spread and then the individual legs right under it?
Yeah, it should actually group them
Yeah.
like the way this is grouping under the symbol. It should group
Right.
them by the position. Yeah. But yeah, adjusting delta is absolutely how you know your exposure for directional exposure, not for the others. But yes, that's a great way of understanding your risk exposure. So I believe in the live mode, which I'm not in right now. Again, I can go ahead and change environment to live, but this is a simulated account. I don't actually have live access on this one. I don't know if I'd have all the tools available to me, and the columns should give you the ability to look at the delta under
Yeah,
live.
I agree. All right, Brandon. Thank you so much for this information, Brandon. There's always lots to learn. So thank you for joining us today. Remember that all these sessions are being recorded and they're available for playback. Just go to the Futures Education Center and they're there. It's under Learn, Futures Education. And that's how you access the Futures Education Center. All right. So everyone, thank you for taking the time and joining us during this webinar. We do these futures options periodically. So make sure that you check our calendar and register for the upcoming one. Brandon, thank you so much for your time. Wonderful afternoon and have fun with your coaching. Okay. See you guys later. See you next time. Bye-bye.